Well, cooling commodity prices are boosting Wall Street. That's our top story today on the Wall Report. I'm your host, Greta Wall. Oil prices are falling today, taking a breather from the rally prompted by Russia's invasion of Ukraine. West Texas Intermediate crude futures are down more than 4.5%, trading around $118 per barrel today, and Brent crude prices, meantime, are down nearly 5%, trading at just under $122 per barrel. Now, other commodities are also pulling back after touching record highs just yesterday. Wheat futures have pulled back more than 6%, trading just over $12 per bushel. But nickel trading remains halted on the London Metal Exchange until at least Friday, after prices topped 100,000 for the first time ever on Tuesday. Now, that was also the largest price move ever seen on the exchange. Russia is the world's third largest producer of nickel, with the metal being a key component in stainless steel and lithium-ion batteries. And while most commodities are falling, crypto prices overall are rallying today after the Biden administration announced an executive order on digital assets. Bitcoin is up more than 1%, 9% rather, to 42,300, Ethereum rising about 7% to over 2,700, and the global crypto market cap up more than 8%. Now, Biden's executive order aims to make, I have a bit of a technical issue here. All right. Back to that. Okay, so Biden's executive order aims to make the U.S. crypto industry, make sure rather that the U.S. crypto industry is not left behind, and calls on the government to explore what's needed for a central bank digital currency. The order says, quote, "The United States must maintain technological leadership in this rapidly growing space, supporting innovation while mitigating the risks for consumers, businesses, the broader financial system, and the climate." Now, meantime, earnings are still rolling in today. Campbell Soup shares are up nearly 3% after beating fiscal Q2 profit expectations. And here's a look at that chart as the stock is rallying. The company reported adjusted earnings of 70 cents per share on $2.21 billion in revenue. Campbell Soup also maintained its full-year guidance for earnings between $2.75 to $2.85 per share. Now, Bumble shares, meantime, are surging more than 45% despite a wider than expected Q4 loss. The online dating company announced a loss of 8 cents per share on $208.2 million in revenue. Total paying users also rose 10.6% year over year to 3 million across all Bumble platforms, with average revenue per user jumping to $22.83. Now, Bumble forecast Q1 revenue between $207 million and $210 million, with full-year revenue guidance between $934 million and $944 million. That beat analyst expectations. Meantime, Stitch Fix shares are tumbling nearly 13% after the company cut its full-year guidance. Stitch Fix reported a fiscal Q2 loss of 28 cents per share on $516.7 million in revenue. That was in line with analyst EPS expectations, with revenue beating, but the company expects revenue to fall in fiscal Q3. Stitch Fix forecasts net revenue between $485 to $500 million this quarter, which would be down as much as 10% year over year. The company also lowered its full-year guidance, expecting revenue to be flat or slightly lower compared to fiscal 2021. And for the economic data of the day, job openings were higher than expected in January. Labor Department reporting today that there were 11.26 million available jobs at the start of the year. Now, that was higher than expectations for just 10.9 million and outnumbered the total of unemployed Americans in the U.S. by 4.75 million. But the Great Resignation did slow as the economy nears full employment. 4.25 million workers quit their jobs in January, down 3.4% compared to December, and the lowest total since October. Now, focus for the market is turning to inflation data tomorrow morning, with the Consumer Price Index set to be released at 8:30 a.m. Eastern. Economists have raised their forecast for that report, now expecting a 7.8% increase in prices year over year. And traders are concerned the recent spike in commodity prices could make inflation worse, even as the Fed is expected to begin rate hikes next week. Let me know in the comments if you think tomorrow's CPI reading will be in line with forecast or even hotter. And be sure you're subscribed to my Coffee with Greta newsletter to get all of the details right in your inbox before the market open tomorrow morning. There's a link in the description box to sign up if you haven't already. See you all back here for the Wall Report tomorrow, and be sure to give this video a like before you go.